Hey guys, it's Stephanie Legacy here, reminding you to love your life and live your legacy. Today, I wanted to spend just a little bit of time talking about some proposed changes regarding the almighty 401k that I read about in the news today. Now, I just have to give a few caveats. One, these are proposals. Does not mean they're going to happen. A lot has to happen. So don't freak out and go run to your investment advisor. It's just being discussed. But I think part of being an informed consumer and making sure you understand and are optimizing your investments and your money today is thinking about things in this scenario. What is today and how could it look tomorrow? And if I don't understand what is today, how can I get clarity on that to make sure I'm maximizing my opportunities today? All right, so it's just a proposal. Second, I am not an investment advisor and I am not a CPA. This should not be construed as financial advice. You should seek out your own professionals for that, and each person's scenario differs independently. All right, so let's get down to it. Today, as we know it, a 401k, as it comes to you, for example, through your employer, so I'm talking pretty much about W-2 employees here, somebody who works for somebody else, although you can make your own individual 401ks, but I am a W-2 employee, so I'll be speaking from that perspective. Today, as a W-2 employee for my employer, I am able to utilize the 401k for a couple of options. First option is to receive my employer match. So my employer provides a match of up to 5% of my salary for the first 6% of my income that I contribute to my 401k. My husband's, I don't know for sure what it is, but I think it's 3 or 4%. So every dollar that he contributes up to the first 4% of his salary, let's say, they will also throw in 4% into his 401k. So a lot of people like to utilize 401ks at least to their employer match because they feel like if they don't, they're passing up on free money. If you're not doing that today, I highly recommend you look into it, see what your plan has, and see how you could optimize some additional dollars from your employer. The second reason people like to utilize 401k is potentially for a tax advantage. My husband and I definitely utilize 401ks for this reason. So we do not have a lot of write-offs, and we are what is considered higher income earners. We don't have kids, we are debt-free, so we don't have a mortgage, so we don't have interest to write off. We just don't have really many write-offs at all. So we use the 401k and really actually max out our contributions to decrease what is called our AGI, or adjusted gross income, and hopefully lower that tax bracket that we fall into, so that overall our taxes can be reduced by lowering the amount of income that we have to pay taxes on. This is all operating within the IRS tax code, and it's something that's available to everybody. Now, when you take money and you contribute it to your 401k, you are doing this pre-tax. So not only are you receiving tax benefits from decreasing your AGI, potentially going into a lower tax bracket, but you also are able to contribute the entire amount. So if I'm contributing $19,500, I contribute $19,500. I don't get taxed on the $19,500 for my traditional 401k that I contribute. What that means, though, is that the growth at some point in time will be taxed. So whenever I go to take that out, that's going to be taxed. Now, people kind of go back and forth and say, maybe you should only, again, this is where it gets into your own individual financial situation. We're looking for those tax write-offs right now because we feel we're earning higher income now than we will when we're retired. So the thought is we will pay the tax when we're retired and are in a lower tax bracket. That might not be the scenario for you. You might be about the same when you're retired, and maybe it makes sense to balance that a little bit more with your investing strategies. Either way, those are some of the benefits of a traditional 401k as it stands today. Now, the proposal that's coming out from the current administration and Janet Yellen is that they would look to remove the dollar for dollar tax benefit that you receive. So instead of me contributing, let's just say $19,000 to make it easy, instead of me being able to say, okay, I contributed $19,000, I'm going to decrease my taxable income by $19,000. No, they'll actually issue a tax credit, and they will say, if I contribute $19,000, I will get 26 cents for every dollar I contribute back as a tax credit. So my tax bracket is not decreasing. I'm staying in that same upper tax bracket. I'm not decreasing where I fall. My income still looks high from a tax perspective, but I'm getting a credit. For high income earners, they estimate that this could mean upwards of an increase of what you pay in taxes, specific to the 401k part, right? About a reduction of 20% in tax savings specific to that 401k. Now, for lower income earners who are contributing, even if they're not maxing it out, let's say they're only doing, like $7,500, which not only that's great if you're contributing $7,500 a year to your 401k. I'm just saying comparative to $19,000 and $19,500. So if you're contributing $7,500 and you're a lower income earner, you don't need the benefit necessarily of writing that money off against your income and putting you in a lower tax bracket because you already are in a lower tax bracket. So this proposal is providing then the same tax credit for a more marginal or median income earner versus a high income earner. So in that scenario, comparing current state to future state of this proposal, a more median or moderate income earner would actually get a greater tax benefit. So they think this might be a way to incentivize people who are in the median to moderate to save more because they're going to see that flat 26%, and they aren't necessarily, they weren't seeing the benefit of decreasing their tax bracket. And then also people who are in higher income tax brackets, they're not able to use this as a way to decrease their tax rate, and they'll still have some tax credit, but they can't use it as much from a tax advantage perspective. When I initially read this, I'm of course always a fan of operating within the tax code and trying to minimize the amount of taxes that we pay. So I was thinking about this, how do I feel about this? I don't know. I try to always just, absorb and then think about it. While I would prefer to not pay more taxes, I think probably a lot of people feel that way. Maybe not. Don't get mad at me if you like paying your taxes and are okay with paying more. I think it could be an okay thing. Now, again, I am not a CPA, so please tell me what your perception is. But right now, for example, if it got changed, you obviously have to operate within whatever code that it is there, right? Right now, because my husband and I max out our 401k, some of our largest investments are our 401ks, which eventually that tax bill is going to come due when we retire. And we're always trying to think, what's something that we could invest in now, right, to decrease so that the growth is tax-free. My company, for example, offers a Roth 401k where I can put in post-tax dollars, and then the growth grows tax-free. I don't do that because I am, again, trying to decrease that tax bracket that I fall into. But for high-income earners, if their company offers something like a Roth 401k, and they're no longer seeing the benefit of their contributions decreasing their tax bracket, this might be a way for them to not feel so bad and to really move forward with that Roth 401k option. Down the road, they're going to not have to pay tax on the growth. And, some people argue that in the future, what have taxes done historically? They actually have decreased some since when Reagan was in office, I believe. But historically, people think taxes are going to go up. So the idea that maybe you are paying the tax now, you're maybe not, you're paying slightly more, but then all of your growth is going to be tax-free. Maybe this is a kick in the pants I need to kind of switch my investment strategy. Now, there are other ways that you can invest from a pay the tax now and growth is tax-free later, things like a Roth IRA, or if your income is too high, you can do a backdoor Roth IRA conversion. We can talk about those in a whole nother video. But for now, I'm just curious, what are your initial reactions to this potential proposal and change for the 401k system? It would be huge because pretty much everybody has a 401k. There are lots of them. I actually have two 401ks, and it would probably impact 99% of people in the US. So tell me what you think. Do you like the proposal? Do you think we should just keep it status quo? Are you a fan of tax now and have investments grow tax-free? Or do you want to see the benefit right now while you're working, earning higher income, and then when you retire and your income's probably lower, then you pay your taxes? I'm very curious to hear your thoughts. I'm always open to listening and learning other people's perspectives, and I am the first to admit that I am just dangerous enough, or know just enough to be dangerous, and I am definitely not an expert. But I think that's a great thing about the financial journey, is just trying to grow and grasp everything you can from other people along the way, slowly and steadily, bettering yourself and bettering your approach. All right, that's all I have. Thanks for listening. If you made it this far, I really appreciate it. And I just want to remind you to love your life so you can live your legacy. Have a great day.